If you've ever wanted to invest in the stock market but feel overwhelmed by choosing individual companies, exchange-traded funds, better known as ETFs, could be exactly what you're looking for. ETFs allow you to buy hundreds, sometimes thousands, of investments with a single purchase. They're simple, they're affordable, they're diversified. In this video, we'll explain exactly what ETFs are, how they work, why millions of investors use them, and how beginners can start investing with confidence. ETF stands for Exchange Traded Fund. Think of it as a basket. Inside that basket are many different investments. Instead of buying one company, you buy the basket. The basket could contain, for example, Apple, Microsoft, Amazon, Coca-Cola, Johnson & Johnson, all together in one investment. The ETF trades on the stock market just like a normal share. Years ago, investing usually meant researching individual companies one at a time. That required experience, time, and often a lot of money. ETFs changed that. Instead of trying to pick the winners yourself, an ETF simply follows an index or a specific investment strategy. The result is lower costs and instant diversification. Imagine an ETF that follows the S&P 500. The S&P 500 contains approximately 500 of America's largest companies. When you buy one share of that ETF, you're indirectly investing in every single company inside it. If Apple grows, your ETF benefits. If Microsoft grows, your ETF benefits. Some companies may fall, other companies may rise. Together, they balance each other. There are thousands of ETFs available. Some invest in entire stock markets. Others focus on certain industries. Others invest in bonds, commodities, or even property. Some popular categories include market ETFs, technology ETFs, dividend ETFs, international ETFs, bond ETFs, commodity ETFs. The important point is that each ETF has a different investment objective. There are several reasons ETFs have become one of the most popular investments in the world. First, diversification. Instead of relying on one company, your money is spread across many. Second, lower risk than owning only one stock. Third, low management costs. Fourth, easy to buy and sell. And finally, they're perfect for regular monthly investing. Although ETFs reduce many risks, they don't eliminate risk completely. If the overall market falls, your ETF can also fall. Some specialist ETFs could also be much riskier than broad market ETFs. That's why beginners should understand exactly what an ETF invests in before buying it. So, when selecting your first ETF, ask yourself a few simple questions. Does it follow a broad market index? Are the annual fees low? How many companies does it own? Has it been operating for several years? Does it match your long-term investment goals? Simple questions often lead to better investment decisions. So let's recap. An ETF is simply a basket of investment. It offers instant diversification. It usually has low fees. It's easy to buy and sell. And it's one of the simplest ways for beginners to start investing. Remember, investing isn't about finding the perfect stock. It's about constantly building wealth over time. If you found this video helpful, please like and subscribe to Valkyrie Investing. Thank you for watching, and until next time, remember, understand before investing.